Hello, Michael Hopkins, Seeking Alpha, here with Jennifer Warren of Concept Elemental. It's July 16th, 2025, and Jennifer, it's been a year since we last spoke.
I know. It's been a long time. Lots
Yeah.
happened.
Oh, yeah, you think so? For sure. So, just to get everybody caught up, what are you working on right now?
Well, usually spring, summer, I start working on this energy edition that comes out in late October. And it's where I kind of do a big sweep of what's going on in energy and then it's relative to this North Texas publication. So it sort of surrounds the viewpoint from the North Texan firms that are here, but it's energy. And so obviously it connects a lot to what's going on in Texas, and we're the biggest oil and gas producer in the country. So that's important. But also I'm working on an sort of a sequel of an AI digital infrastructure feature as well. And so I'm actually working on four sort of simultaneously at the same time that go all the way to the end of the year. So I've really been deep in the weeds on all things energy, pretty much. Um,
Yeah, and I think that one of the things that we keep seeing, or I at least keep seeing, is this digital infrastructure, AI, the energy requirements. This is, I mean, it's still a big topic among not just people in tech, but also in energy as well, too. How are you going to support all of this infrastructure?
right, right. No, it's the big question, right? And people are, developing their strategies, right? Various players, and yeah. So no, it's a brave new world for sure.
Yeah. So, given all that, how would you describe the current macro energy environment related to oil and gas?
Yeah, so I think, obviously, just traditionally we look at oil and gas as energy, but also power generation, electricity demand is increasingly in the news, largely because of this expected increased demand and electrification, largely owing to data centers and all that's going on there. But there's also a big piece of industrialization, reindustrialization, especially in Texas, that we can see, and it's happening in other parts of the country as well. So what it means is, I think in the United States, just means more energy demand, right? And there has been softening in prices compared to where they were, pretty much since the beginning of the year. Things kind of took a little bit of a turn down, and some of that was related to tariffs and concern about what that meant for the macro and all that. So I think I would describe it as we're kind of finding our bearings, and producers are responding to price signals as they do. And then the power part of it is really a mixed bag depending on what grid you're associated with, what kinds of data center demand there is, and all sorts of things. But basically, long story short, there's a lot of new demand, but there's also global demand, just with growing economies continuing to you know go from developing to developed, and just all the energy is a big piece of that growth. It equals energy security, energy prosperity. They go hand in hand, and wealth creation, and you need energy to underlie all that part of your economy. And so there's growth just connected to that as well. Shall we look at these slides, I guess, too?
Yeah, I
That'll
think we
kind of
should.
give us a little color. So, so this is just kind of looking at year to date, and which I thought is kind of, and this is just sort of energy in general macro. And as you can see, things have taken a bit of a hit, although the S&P has kind of cruised along and gone up, since after sort of the initial tariff scare in April. Um, and this is just kind of giving you a sense that, wasn't great news for oil and gas, right? Trying to go to the next slide. I don't know why it's not advancing. Um, Hang on. Whoop. Um, just make sure I can get on this. Okay, I have to do it this way. And so this is just looking at the last month. And as you can see here, it's a little bit better news for some players like CVX. Still not great news in general. S&P's been coming back a little bit more increasingly, but this kind of gives you an idea of the last 5 years. This is a Dallas Fed energy survey just showing the business activity, the drilling activity with oil and gas producers in our district, which represents, a big majority of oil and gas players, right? And so what they were saying in this recent survey was that 25% of large E&Ps were going to significantly decrease drilling. 20% said decrease slightly. So it's basically about 50% of large E&Ps have reduced their drilling, owing to lower prices. And we're still kind of at those price points. So there's not going to be a change in that until prices come up some. And if we hit 60, firms would reduce even more. And so you can see here, these rises here, this is like after the pandemic here, activity starts picking up, because we went from this low, and then you have this activity picking up here again when Russia invaded Ukraine. And then this is really, it starts going down, but it's just starting to normalize, right? There was this normalization happening from 23 to 24 with energy, oil and gas production. And then it's taken a bit of a dive, because of tariffs and the outlook, the macro outlook. Oil and gas producers have not been happy. Let's just say that generally speaking. There's a lot of different cases in that as well. This is just looking at it from a 10-year view. And here in 2016, where it's really low, this is when OPEC laid down its gauntlet and tried to take market share. And then once that kind of started course correcting, you see a lot more activity in oil and gas. Boom, we have this massive pandemic. This is 2020, 2021. Then we're coming out of it. It's picking up again, in the 5 years I just showed you. And then so here we are. So we're kind of almost in this like normalization period, but it's a little unclear because of the uncertainty, right? So this is just kind of recapping some of the bullets from the Fed survey that was taken in June, sort of the latter part of June, mid-latter, and they were expecting $68 a barrel by year end, 72 in 2 years, 77 5 years. Interestingly, I also saw a Kansas City Fed survey. They expect 79 in 5 years. And that could have to do with a number of factors. I mean, they're in a different oil and gas, kind of region as well. So that could have colored the thinking there. But it's kind of interesting. And then the other big takeaway here is with Henry Hub at 336 forecasted at year end, natural gas prices. But longer term, expecting over 4 and some change, and then upwards. And I think this is reflected a lot in just this increased demand for natural gas. Some of it for LNG, a lot of it for power gen in the United States as well. And natural gas prices are going up because of the reduced drilling for oil. In the Permian, when they pull back, then you have less associated gas that's produced. And oil has been the driver of a lot of the production, right? And so there may be a flip with that at some point in the future when gas becomes more profitable. And so that could be, we don't know when that will happen. It'll probably be some years out. And then just this is an industry quote just saying that the world's been delivered benefit to OPEC in this most recent year, and so not real excited about that the industry. So just a little bit on supply expectations, demand expectations. OPEC is projecting 113 million barrels a day in 2030. We're at about, 103, 4, under 4 last year. IEA expects 104 and a half. And so those are, and they're not projecting anywhere near what OPEC projects. So that's a big change from 103 or 104. That's 10 million barrels a day more in 2030. So I do not know where they're getting that forecast from, but it seems a bit high to me. I think it's probably something lower and in the middle, you know. Um, and then interesting too from the Kansas City Fed, they were just saying capital will fly to dry gas areas if prices go above 350 for Henry Hub. And then they were also saying that gas prices are just like weather bets right now. That's what the industry was saying. So that just indicates this trading idea, right? And that doesn't really reflect the whole truth of gas-weighted oil and gas firms either. This is just a graph showing some of the LNG expectations rising here to 2026. I'll put us over here, as you can see. And it's actually, the expectation is for those with those facilities that are going to come online, almost 10 BCFs a day from in the latter part of the 2025s here to 2030. And we actually peaked at 116 BCFs a day this year. Year before, it was 106 BCFs. So that was 10 full BCFs in 1 year that was not on the radar of the EIA at all. So that also goes to show you that best laid plans and guesses get turned upside down with oil and gas. Um, Hence the volatility at times. Um, and this is just kind of showing some of where the change was of some of this gas production, that a lot was forecast to come from the Permian, and then the Haynesville as well, the play that covers Louisiana and East Texas. And then next year, they're projecting it's going to be more from the Permian. But again, I don't think that that's necessarily true either. So um, I kind of don't believe that one. So this is just looking at energy tech and economy altogether 1 year. And as you can see, really triple Q, SMH, which is semiconductors, over a year, I think it was like 6%, which is very different than what happened after the big announcements by Trump in January, all the AI announcements that really sent, a lot of this skyrocketing. And so this is just showing natural gas over a year as well. And this is just showing 1 month. And really kind of the news is, again, semiconductors here, almost 9%. Natural gas down, oil coming up a little bit, and then just the S&P 500 index, 4%. XLE coming back, triple Q. So kind of a leveling out, right, of things. This is 6 months and, you know, similar story. And then we'll just end on that note. There's the basins. There's a map for you, Michael.
I really like my maps. That's
Yeah.
for,
And
yeah.
I will also just note that, here, the Marcellus, there were some big announcements today in the last couple days, from that AI summit in Pennsylvania, where they announced, $90 billion of investment. And I know that EQT was a huge beneficiary. Its stock went up because, it's going to be, it's slated to produce a lot of gas for some of these, projected data centers. So they kind of got their due. Texas has had its due from all the Stargate announcements and being sort of ground zero of that. And now you have, Pennsylvania getting its due with all the, natural gas resources. But, even when you talk about these announcements like that, I'm going to stop sharing here. Um, you know, these. this is going to take a while. It's not happening overnight. And so you see these announcements that create all this momentum and these price rises and everything with various stocks connected and then pullback. So, I that's not my game, and so I sort of now I find myself being discerning about it all, especially because I'm in energy, because I understand how long it takes to produce resources, so.
Yeah, a lot of really good information in there. A lot of slides, that's for sure. Going back to some of the earlier slides, some of the projections for oil and gas demand going forward. Your thoughts about the projections that you're
Yeah,
seeing?
I think OPEX is high. And then I think the IEA is probably low. And so it's probably something in the middle. 113 million barrels a day demand globally. For oil, I don't know if that's really gonna I don't know that that's true. I don't know that it's not true either. I think we really got to see what's going on in the future and pricing and all that, especially if in this low price environment, you know, with US, dialing back a little and OPEC trying to, get share and all that. It's just a real squishy dynamic and I need to see how things play out with the global macro economy and our economy, because, we're doing okay. We've kind of recovered somewhat from some of the tariff woes, but I think there's a lot of feeling out what's real, what are real projects, and what's really going to happen with AI. And, it's absolutely positive for sure. But we get ahead of our skis too at times.
Yeah, yeah. And yeah, from being in Colorado, I know what you're saying about that there too. But also looking at any kind of specific nuance that you think is relevant to do or what to think about with producers at this time, given what's going on
Yeah, like
environment.
for example, today, the big Trump announcement of 90 billion in the Marcellus area, Pennsylvania. EQT went up like 9% in one day, because of the expectation for the gas demand that they're going to meet. And, I saw something like, they're expecting they're going to produce like 2 extra BCFs a day because of these data centers. Well, okay. And definitely, I mean, the Marcellus has tons of gas. But there's a lot of deep details into how that's, first of all, they have to convert, for one, they're going to have to convert this coal power plant into a natural gas plant. That's going to take several years. That doesn't happen quickly. I know this because I was connected to a project in the Texas Triangle that went from basically scraping a coal-fired power plant and having to stand up a natural gas fired power plant. That building the gas plant started in like 2024. It'll be online in 27 or so. And they had turbines, they had some of the turbines, and there's been a bit of a backlog on some of that. There will, I know they probably have theirs earmarked, but there's a lot to it. There's a lot of devil in the details. And I'm not trying to throw cold water, but I think you just have to, like, kind of let things prove out over time. And also, like, for example, Enbridge is part of the gas pipeline that's going to supply that big data center that was connected to EQT and some of this. And this has been in the works for a couple of years. And so you get this piggybacking effect, of oh, now we're going to announce this and, woohoo. you know
Mhm.
so anyway, but I mean, all this stuff has to be secured, but it takes time when you secure the land, and the developer, and, lay on any new power generation, and, the supply chains connected to it. But bottom line, gas producers do well with all this electrification. Oil and gas does well. with it. So that's just a floor, a type of floor of demand. How much demand, we're not really sure at this point. There's a lot of projections, and I've seen many, but
Mhm.
there's a lot happening for sure.
Some of the overall drivers in your mind with energy going forward?
Well, just some of the things I've said. I mean, you know,
Hmm.
around the globe, there's still population growth and there's still economies developing, increasing their standard of living, like India and Indonesia and South Africa and just, all over the globe, Southeast Asia. There's a lot of gas demand going forward in Asia and Latin America, and it's everywhere, and more here too. And fortunately, United States oil and gas producers, should do pretty well in this because we are able to export, and we're a low cost real producer because we're not having to pay for budgets, because we're largely a private market, even though many are publicly traded. We run by private market principles, right, as opposed to being government run. But I mean, oil prices are oil prices, right, and they are going to be the driver.
No doubt. I think you've also touched about on some of the topics, seeing in terms of power demand going forward, some of the key drivers. Maybe not only kind of summarize that, but also maybe what might challenge some of your conclusions here, or just some of your thoughts and ideas about what might happen going forward.
Hmm. Yeah, I mean, like when you see the announcements with Westinghouse, we're going to build 10 nuclear plants, and they're going to we're going to start doing it in 2030 because that's 5 years away. How long is it going to take to build those? Is it 5 years? Is it 7 years? And so that could end up picking up incremental demand if we do have all this data center demand, right? So we do have to supply what we have on the books going forward, right? So that's what I'm most interested in. I'm less interested. I am interested in, projections going forward, and yes, that we're going to have more nuclear, and it's going to come in a variety of forms, large scale, you Oklo and SMRs, and all that stuff. We're definitely going to see all that in the future because, we're going to need to meet this demand that's coming from digital economy, digital infrastructure, in reindustrialization, i.e., onshoring. We are bringing more manufacturing back. It's happening. TSM in Arizona, Samsung in the Texas Triangle, TI's plant in Sherman. Um, it's there's a lot of that going on around the country. New chips plants, and there's a new solar, what is it? I think solar manufacturing. I think it's um, oh, what are those called? The panels. Thank you. Panels. There's a lot of supply chain that's trying to come back, over time. And all that's going to require power. And we have a lot of it going on in Texas, actually, but it's in other places. It's in, the Northeast. It's in the Midwest. You just see a lot of announcements all the time about new manufacturing, and of course you see large data center announcements, and some will make, and some will make partly, so that's all, TBD.
Yeah. Well, how about something, well, I think still in the energy conversation still is about sustainability, electrification. What do you think of some of the implications for energy production and sustainability going forward related to oil, gas, and with the potential electrification, potential electrification going forward?
Yeah, I mean, I think there's a couple of things going on specific to oil and gas. Obviously, the United States is one of the most cleanest producers of oil barrels, period. And so I think at some point when there's a premium for that, that's a good thing for the United States. We're also increasingly, producing natural gas cleaner. Um, Once we bring on a lot of this carbon capture that's happening more, especially with the Trump administration, that they like CCS, and so and I have heard from various natural gas producers too that they're focused on making sure that they're trying to make sure they don't have methane emissions and they reduce their carbon emissions. And so that's cleaner natural gas, because you're going to have to compete to a degree with wind, solar, nuclear, because a lot of the big tech, they have net zero goals and things like that that they still want to meet. So I think that's not out the window either. And so I think there's going to have to be, I hope, greater attention on doing all this sustainably, especially if you're going to be adding all this demand. And I think, especially like when you talk about data centers, being in, different types of communities, and people are going to want things to be cleaner. They're not going to want like diesel generators running near them, because that's not good. And so, there's a whole lot of thinking and that's got to happen alongside the development of data centers.
Yes, and I think we've seen some of that out west as well too, in terms of, when they put something in like that, a data center, that community input is a key part of that as
Yeah.
well.
Yeah. And there's a lot of really good data center developers. A lot of them are private, but they know, I mean, that's their edge, is to do this more sustainably, because you want to have that license to operate. And if you're going to add a bunch of, power demand, you're going to have to offset that as well, including water use. So I think you're going to see a lot of innovation, continued innovation in that. And you already see it. I see a lot of that as well. So I think that's headed in the right direction. That's good. Just a greater awareness that, you know, that's just the bottom line demand, is that, you need to be thinking about doing these developments more sustainably, if we're going to have more of this. So
What are you thinking in terms of investment going forward?
yeah, I mean, I still have, this sort of mixed portfolio of, a lot of energy and then a lot of tech. And I definitely have some concentration in semiconductors and that sort of thing. It's been interesting to watch. There's only like two publicly traded big data center, the REITs, DLR and Equinix, Equinix. I always want the Equinox, and
Hmm.
and they've kind of diverged in their performance, I've noticed of late. And I had interviewed the CEO of Digital Realty last summer, and in this feature called "The Long Runway for New Energy Demand," and you know, good guy at the helm for sure. Very very conscientious, and good growth, good strategies going forward, and that sort of thing. So I think that's a little bit interesting to watch, as well.
Well, again, really great conversation here about where things are going and what investors need to take a look at. So to conclude, I hear you're speaking at the Middle East Conference, University of Montana, next spring. Is that right?
Yeah, that's kind of on the books. I'm
Yeah.
waiting to hear, what my exact role will be, whether I'll be on a panel or doing my own keynote. It can vary. But I'm also going to be, doing sort of a breakout session on sort of, women and the growth of the economy. And so those are that's sort of happened from my last Montana, the speaking tour I did, where I talked about AI and energy, but then also just, what the digital economy can mean for, women in other parts of the world, because we're a big part of the labor force, and with digitalization and the online world, there's a lot of potential ahead to be an entrepreneur or other things. So
Well, I'm sure you're looking forward to that
yeah, definitely.
in 2026 or 2026. Can't believe I'm
26. I know. I didn't want to say that yet. I'm like, stay 2025. Stay frozen in time.
right, right, exactly.
Hmm.
Well, Jennifer, appreciate the conversation. Thanks for the time and for the insight, and looking forward to speaking to you again in the future.
Sounds great.